Successfully learning to trade as we're going over the Forex basics. So we're talking about the foreign currency market or foreign exchange currency market, however it's written out. We like just saying Forex, we keep it simple, right? We learned that in our most important trading tips video. We want to keep it simple, silly. If you haven't had a chance to check that out, please go and check out that video and some of our other Forex basics videos. And as we're developing more content and some things for our advanced traders as well, please stay tuned. So today we get to go over something that I think is really key, because as we're getting into the Forex market, it's important that you at least have a minimum understanding of what it's even going on. So that starts with knowing the basic of what is a PIP, right? I mean, you can't really trade in the market if you don't understand PIPs. And you probably have heard it. And if you're not really familiar with it, that's okay, because that's what we're going to talk about today. So what is a PIP? And we've always see it's usually capitalized, right? So it's kind of hinting it's an acronym of some sort. Well, percentage and point. Okay, and there's some variations to how it's said, but at the end of the day, 1 basis point of movement. So in the market, we have a price, and when it moves up a point or down a point, that is a PIP. That is the basis of everything that we do in the foreign currency market. You can understand everything else, but if you don't understand how it's actually moving and how you make your money, then you're not going to have a lot of success. So in that, going more, how do we identify a PIP? Where do we find it? Well, it's the 4th decimal point. In that space, we learned, like in school, the tenths, the hundredths, the thousandths, right? We learned the spaces after the decimal and how to add those and subtract those. It was the same thing with pips, except our key unit is in that 4th decimal point spot, okay? And if you're trading with the yen, so the Japanese yen, and there's a few other pairs as well, it's going to be the 2nd decimal point spot. So that's not to confuse you. And usually when you see the number, you'll get it because it'll only have a few numbers after the decimal instead of that 4 or 5 numbers. And we'll talk about that a little bit more. We have an example we're going to go over. I'd say that it's the most important to grasp over dollar amounts, because a trade really is a trade regardless of lot size. This is not to say that our allocation is not important, but it is to say that as we're learning, we might feel like we're not doing a whole lot because, we're trading at a 0.01 lot size and we're working really hard and all we made was like $8, right? But if you go back and look and say, wow, well, that was a, 56 pip move. I'm not doing exact math here, so don't quote me on that. But if you go back and look at it, you say, oh, wow, I mean, that was about 40, 50 pips. And you say, okay, that's pretty substantial. If I was trading a full lot, that $8 might have been $800, right? So it's really important that you learn how to count and track your pips. It's very, very essential. It also helps with our momentum as we're learning to trade and our self-esteem, because you may not feel, like I said, you may not feel like you're making a huge dent in your account. But then when you go back and you count the pips, you realize that you're consistently getting 20 and 30 and 40 pips at a time. It's just that you're trading on a lower lot size. So when you get more confident, or when you have more money in your account and you can take advantage of that leverage, that same strategy, that same trade will now yield you, 5, 10, 20 times more, just because you are able to now count your pips and you learn how to master a strategy at that level. So let's do an example of counting and tracking our pips. Move me out the way a little bit here. All right. So these are just some approximately current prices in the market. You can find these on anything. You can use the bid or the ask. It doesn't really matter. But this is something I would really recommend practicing. So the euro dollar is currently at a price of 1.10809, right? Now you're like, whoa, whoa, whoa. So we're only talking about the 4th decimal point. There's 5 numbers after that decimal. Very good. That is called a fraction of a pip, or a fractional pip. And it might change, the dollars that you make here and there if you pay attention to it. But in the grand scheme of things, really the 4th decimal point is what we're going to pay attention to. That's our whole pip, and that's what really matters. So I really kind of disregard that 5th number. let's focus on the fourth, but I want to show you because realistically, this is what you'll see. And so now we look at the dollar yen. It's currently at a price of 103.352. Well, remember for yen pairs, the second decimal point is your pip. So now in this scenario, your third decimal point is your fractional pip, okay? Still can kind of ignore it. It might help you boost a couple extra dollars, but not a really big deal. Aussie Kiwi, just another example of a fourth decimal point of a pip, 1.06878. So right now, we're looking at that fourth decimal point. So I want to do a quick exercise. I want you to take the euro dollar and I want you to subtract 50 pips. I want you to take the dollar yen, I want you to add 50 pips. And I want you to take the Aussie Kiwi, and I want you to add 50 pips. I'm going to pause the recording here, and I hope you will as well. Take a minute and do this for real. It takes like 2 seconds for each pair. Take some time and see if you can figure out what it is. Awesome, awesome. Well, I hope you actually paused the video and took some time to do it. Let's actually take a look at the answers. Awesome. So, if you were trading the euro dollar and shorted it or sold the pair and it went down 50 pips and you took profit, what price level would you be at? This is the real life application of what we just did, okay? So we're not just adding and subtracting for fun. But if you just had a 50-point short that you gained 50 pips on in profit, but the actual pair went down 50 pips, you would now be at 1.10309. Remember that fifth decimal point is just there. Dollar yen. If you bought it or went long on the pair, you would now be at 103.852. Aussie Kiwi. If you went long on this pair as well, you would have 1.07378. So just note that most of the time, depending on where you're at and how many pips, we did 50 pips. So this impacted our third and fourth decimal point moving. It's just as simple as saying, okay, with the euro dollar, I had 80, I subtracted 50, now I'm at 30. It's the same basic math. You just have to really make sure you're keeping the numbers in line. We saw actually, though, with the Aussie Kiwi, that the second, third, and fourth decimal place were impacted because that 50 pips took us up to a whole nother level, but it would still be the same as if you had 687 added 50, you would now have 737. So I hope this was very helpful. I hope it made sense. And if you have any questions, please put it in the comments below. Contact us. Take some time. Practice this week. Take a note of what you're actually doing in your trading and, give yourself some credit because this is a pretty substantial move. Even if it's 15, 20 pips, if you're doing that consistently, no matter how much that dollar amount is, it's really key because once you can increase that lot size and you feel more confident with it, the same exact trade will now yield you exponentially more. So if you need to talk to us, be sure to connect. Check out the links and things in the captions below. And remember, trading with Coco. I'm not an expert. I'm her expert. And feel free to connect with us. Had a blast today. See you guys soon.